Craig, let's talk more about the people interested in investing in trust deeds. So let's talk about, is it suitable for somebody that's retired?
Yeah, I think it's a good passive investment for somebody that's retired. Once again, it's a safe investment. It's secured by the property. I think as long as they have enough to be able to invest in a trust deed and not, say, have all their eggs in that basket,
Sure.
even though, as you know, with a lot of our clients, I mean, they start out with a certain amount and they do want to tend to put as many eggs in our basket as they can. I still think it's something that's good for diversity, but it's just a great, safe investment and very passive.
Yeah, and we might cover what wouldn't be appropriate is there's people that have lots of money, and we do end up with sometimes a great percentage of that, but those people are capable of understanding or taking that risk.
Exactly.
The difficulty is when somebody has, let's say, 25 grand and you've got another person with 25 grand, that's really not probably the appropriate investment for a trust deed investor.
It's really not, because they just probably shouldn't do that, put all their eggs in one basket.
Yeah.
As you mentioned before, when you talk about somebody that maybe has $1 million and they do end up putting a large portion of that with us, just in the nature of our trust deeds, there's diversity because all that money isn't in, say, one property.
That's right.
So usually it's dispersed between 8 or 9 first trust deeds in various properties. So just in the nature of the trust deed investment itself, it's diversified. Another
age range that really is attractive to this is the baby boom generation that's like myself,
yes.
or you're younger than I am, but yourself, to where it's pretty consistent. You're not risking principal nearly as often as in, let's say, stocks or something. So you can kind of go, okay, if I just do this over a long period of time, I'm going to end up with this over there.
Exactly, and you've seen me do that many times.
Absolutely.
With my yellow sheet. This much times 10 or 12% equals this much after 10 years.
Yeah.
And I think what happens a lot of times, as you mentioned early on, I mean, we do a lot of training. A lot of people want to be like property buyers. Even myself, when we first met, I thought that sounds great.
Mm-hmm.
But for several reasons. One, I just get calls from a lot of people that have heard you speak so many times, but they just really don't have the time to pursue the buying and selling of real estate. So they use the trust deed investment as a way to be involved in it, and it's a very good return. Or you take somebody like myself who probably just prefers the passive and the less stressful nature of the trust deeds versus being the property, flipper or rental owner, because I know that's not for me personally.
Yeah, that being a real estate investor is not a passive event.
No, it's not. And I saw that right away when we started working together.
Right. When you start talking about people that might be interested in it, also a professional that's spending a huge amount of hours making large incomes, either a doctor or a dentist or a business owner, and this is something where they're putting a lot of money in a retirement vehicle, and this is a very appropriate investment for them as well.
Oh, it's a great investment for them. We get a lot of IRA money, retirement profit sharing type money. Once again, just because it's very passive, they don't have to do a whole lot to get a very good return on their money.
Occasionally we have people that we know and then all of a sudden they inherit $1 million.
Yes.
And in some ways that's sort of scary for them and
right.
for anybody that's about to be handed their money, because those people they're susceptible. We've seen some of those big chunks go to the wrong places.
Yeah, I mean, it's unfortunate that that's because I mean we've heard so many stories where somebody's just taken a windfall of $500,000, and I can use a specific. I mean, they invested in something that was just a business that wasn't even a secure loan.
Right.
So you take $500,000 that could generate like $4,000 or $5,000 a month for somebody.
And they just didn't have enough experience to know the difference between this and that.
Exactly.
Okay.
Exactly.
We're now starting to get involved with more speaking in front of groups of wealth managers.
Yes.
So there's people that direct other people's money, and so that's another group of people that probably are not as educated on what trust deed investments are, and also the specific types of borrowers or properties that are safe versus ones that aren't. So that's another group of people that are going to be interested in this.
Yeah, I mean that's a group of people currently that have maybe money in just checking or savings accounts at 1%.
Yes.
And I can't tell you how many times, like, as you know, we've been doing this for, 14 years together and making investors 12%. And I know there's a lot of other high returns out there that are riskier, but I can't tell you how many people have told me 9, 12%. They go like, oh, that's just too good to be true.
Yeah, it's like there's two different worlds.
Yeah, it's like,
Yeah.
it's just amazing. They just think, they can't believe there's an opportunity like that.
Well, I am looking forward to, we're going to start speaking with Hugh Broma and his group Entrust, and those
Yes.
are retirement dollars that I know don't often find the appropriate home. And so, yeah, we're very excited about talking to people about trust deed
Absolutely.
investment. One of the things that happens too is after a downturn, you'll have people start looking for the miracle that will replace what they've lost.
Right.
And that's one thing trust deed investments won't do. And it's intended to not lose principal and go forward with a known return, but it's somebody looking for a miracle that's in a kind of in a dangerous spot to me.
Yeah, somebody that has to do something
Yeah.
is always going to make the wrong decision.
Yeah, they're trying to do it too fast.
Exactly. It's just such a great vehicle for somebody who's made their money and they just want to keep it. And that's just the best way for it.